bit to cover through what are some of the outlook for 2018 in terms of macro theme. Okay, so this one again, everything we share, all disclaimer is for you to learn. Then of course there are some ideas in it that you can take action, but make sure you know what you're doing. Okay, so these are macro trends in 2018. Okay, where I come up with all this conclusion, you can find it in the report. Okay, so these slides or whatever you see today is a summarized version, or I would say a conclusion of what I did based on the research. Okay, so first is Lester shared this as well. Growth in terms of GDP has been trending up. The important aspect in macro analysis is output gap is closing above zero. Output gap in layman term is a measurement of how much more room in terms of capacity can the economy take. Okay, so when output gap is above zero means you have reached maximum capacity. Okay, so this is important because when output gap crosses above zero, inflationary pressure kicks in. Alright, so that's where I have the second.
Hey, where's my clicker?
Oh, Jerry,
Pass me my clicker.
so I can point. Yeah, so you know where I'm referring to. Okay, so short-term inflation, because of output gap, short-term inflation is still expected to continue sideways. Alright, how I actually have all this conclusion, the indicators, the tools that I use in economics, you can find in the report in more details. Alright, but the conclusion is inflationary pressure is building up. Okay, which means that you might not see inflation in maybe the next 3 months, but you might see inflation suddenly build up after that. Okay, and because of this two understanding, okay, based on this investment clock concept, you can find out more in the report also. We are based on just these two. So this is an economic model. Okay, we are currently in the overheat phase. So when you're in this phase, commodity market tends to perform. Right, keyword is tends. Is not compulsory. It's not 100%. Okay, so this one again, Lester did point out that moving into first quarter of 2018, commodity might be the crucial asset you want to look into. Okay, so that's where, of course, you Lester look into the index, Bloomberg index. You look into Bloomberg. Okay, so actually, if you look into that, I have that chart in the report as well. Crude oil makes up about close to 40% of the index. Okay, so and that's the reason why we all pick crude oil to talk about. Okay, so I did a macro fundamental analysis of crude oil. So this is the conclusion of crude oil. Okay, it will be a good asset play in 2018 with a potential target around this. Okay, which means that you need to have your own technique and strategy, right, to see where you can enter with a good risk to reward ratio. Okay, so this one here, of course, is the potential target of reaching, but where you enter, when you enter, we use technical to actually help us with that. Okay, because of oil, then of course the next currency more related is currency trading wise is looking at Canadian. Okay, so Canadian dollar CAD, so Canadian will strengthen, so we believe that dollar Canadian will continue to present good shorting opportunity. Okay, so this one here, the target expected can actually reach around 1.1919 all the way to as low as 1.1024. Okay, so this one here, of course, dollar CAD. Later I'll share with you some more charts. On top of dollar CAD, there are more currencies in terms of Canadian that you can look at, more pairs. Okay, so I actually highlighted and pick up the same like what I did last year. Alright, so some of the currency pairs that you can focus on for the entire year. Okay, stock, if you are looking into stock, because of commodities market, the sector in the US to look at is energy sector. Right, so what I did is I looked into the energy sector, what are the top market capitalization stock, and then put a tech play on it. That means put a technical analysis onto this stock. Okay, disclaimer is that this stock I never run through fundamental yet, which means that if you want to go for longer term investor, you need to look into the fundamentals as well. Right? So for me, it's simply based on the rationale thesis of commodities market, go down to energy sector, find the large market capitalization stock, do a technical analysis on it. So this tree is actually considered the large market capitalization stock and technical aligned with it. Okay, so in the report, you actually have more stock, right? But today, highlight is this tree. Okay, so I'll share with you the stocks chart later. Okay, so moving on to 2018 and 2019. Okay, so this is actually a bigger, broader perspective. So just now that slide is a quick summary of what you can focus on in 2018. This one here, I want to point out is about passive investing. Okay, so everyone is actually saying, wow, if you do nothing this year, you actually earn a lot, more than people who actually actively manage or trade. Okay, but I want to highlight to you that if you go and look into the whole stock market history, 2017 is an outlier. Okay, so if you base on the concept of normal regression or put an NA to it, okay, we are at the extreme end, or you imagine as a Bollinger Band. Okay, 2017 is at the extreme end of your Bollinger Band. So what will happen next is high chance you will come back to your mean. Okay, so what we believe is passive investing. That means you buy bonds, buy index, do nothing, will be very tough for the next 5 to 10 years. Okay, which means that you, even if you apply a dollar cost averaging strategy, you will suffer, because imagine if the next 2 to 3 years it goes into a recession. It takes another few years for you to recover to where you enter, and then the next few years for you to make more money from where you enter. So I believe not many of us has that many 10 years to go. Yeah, so this one, take note of it. Yeah, so take note of this. In the report, I actually explain more in depth why passive investing don't work in today's context moving forward. Okay, so this is more of the macro trend why now this phase passive investing cannot work. Okay, and then of course this one we talk a lot about this in one of the meetup, very brief. Okay, so this one you can find more in the report, right? That there is a potential deleveraging. Okay, this is a very big word to put it simple, right, is that a lot of people borrow money from a bank. Okay, so now is the time for the bank to collect back their debt. So that is the understanding or layman understanding of what global deleveraging is. Basically, is to clear debts. Okay, so when you clear debt and nobody can pay, it will potentially cause a next financial crisis. Okay, this one here, you can read up more about the report why this time round, this financial crisis will be bigger than the 2008. Yeah, so this one here, just take note that we are in, and because of this, passive investing won't work for the next 5 to 10 years. Okay, when this happens, okay, that means when this crisis starts to happen, when global deleveraging starts to take full force, safe haven will definitely be the play. This one I think almost everyone knows. When there's a risk, you go for safe haven asset. Okay, so safe haven asset, we will be focusing in terms of currency will be the US dollar. Okay, in the report, I briefly mentioned that we will stay away from Japanese yen. In this case, for this context, we won't look into Japanese yen as a safe haven play. Okay, so there's more details in the report, refer to that, but it's still very short because the report very long already. So I'll leave this topic, the yen play, into another report. Yeah. Then in terms of bond, don't go and look into short-term bond. When this happens, look at long-term bond. Alright, so between 20 to 30 years, very straightforward one. So for stocks, right, very clear cut is defensive stocks, right, under your consumer staple sector. Okay, so this is more on US side. Okay, so I scan through PM. PM is the ticker of the stock. So later I'll show you all the chart. Okay, PM is the best low risk entry. This is again only based on technical, no fundamental. So if you are in options play, okay, I'm not. The view is some of you might venture into option. When this happens, okay, you can look for a buy call on wicks option. Basically, you play shorting the risk. Okay, so basically wicks have a tendency of shooting up, right? So that is one opportunity. And then of course, how to time all this is important, because cannot now go and buy, and then next year don't happen, you suffer a drawdown, or let's say you need to pay a holding fee. You need to service that holding fee, right? Not worth it. Okay, so you also don't want to lock up your capital, your cash flow into all this. So how to do it is you need to time it. Okay, so in the report I also have various market liquidity indicators, but based on those, current liquidity is loose, which means that the full force of global deleveraging haven't taken place yet. So 2018 might not see that crisis, but we might see signs of it going into 2018, and then it might happen in 2019. Yeah, so this is the big picture. Okay, so quick one, commodities market. Lester did show you the chart on the commodity index. What I did was look at the commodity index compared to SPX, which means I'm comparing the returns or price movement of commodities and SPX. So we can see that this chart here is basically commodity index over SPX. Okay, so when this price goes up, basically means commodity index will rally more than SPX. Okay, so this one technical setup you can see is a wedge. Okay, this one very difficult for it to go lower because if you zoom out, okay, it's actually very low. Okay, you have a previous support in the past. So when this goes up, your commodities will have the tendency to rally as well. Okay, so this one you cannot trade one because most of us don't have access to this. This is more for analysis. So can trade is of course your crude oil. This one I shared in the group already. So this is a daily chart. Okay, I'm expecting this so it's a technical analysis. So maybe first quarter it might do a retracement. From this level, it might be a good opportunity to long it. Okay, the fundamental aspect of why can buy oil is in the report. So refer to it. This is just technical. So quick glance, you know this is the outlook for 2018. Okay, then of course, commodities, the next one is gold Okay, if you look at the commodity index, gold is the second or third largest contribution to the index as well. So when that rally, high chance it will also pull gold up. Okay, so potentially this one over here is of course you don't want to long here, so wait for a technical retracement and then go up. This again daily chart. So this whole play is for the entire year. Okay, so to look for long opportunity up to around first level 1380, second level 1470 Yeah, all this I will put inside the group, so don't worry about that. Then commodities, okay, this one I don't look into it, but for those who are interested, coffee Yeah, I want to highlight again, commodities, all commodities, if they have a production use, cannot go zero. Which means that if you close two eyes, long it, put a stop loss at 0, you won't stop loss Yeah. So this one again based on technical, can look for a long setup. It's currently here already. Okay but this one you can see the fluctuation or the volatility of index not as high as currency. Okay, so this one you can look as potential investing opportunity also. Okay, cool. Commodities, coffee is also another one. That's the few. That means what I did is I filter the potential one based on technical. So like your sugar, orange juice, all those technical, no setup. That means not an ideal commodity to look at based on technical. Okay, Canadian dollar against the US, you can see this one is weekly. So this one, based on the last year outlook, we are seeing that this is impulse, this is correction, this is impulse. So I'm expecting there is still some more room for it to go down. That means continue this year, we'll be looking at it. Okay, dollar CAD, you need to take note. If let's say the macro trend of global deleveraging take place, we expect dollar to strengthen, then this one will be a little bit contradicting. Alright, so that's why if there's other currency pairs, it might present a better opportunity. Okay, so that is where you can potentially look at Canadian yen. Okay, so this is again a very nice setup. You can wait for a retracement and then look for all the way target around 97. Okay, so these are all big opportunities throughout the year if you can follow through. So that is one review that I did. Follow through whenever there's a potential, follow through it. Okay, pound CAD. Okay, also another big opportunity when it goes. Yeah, so three currency pairs that you can look out for if you don't trade oil or don't trade stock. Okay, for stock it will be again fundamental not done, just based on tech and the macro trend. ExxonMobil is presenting a good setup. Okay, so you can see impulse here, correction here. Alright, so we expect one more up towards 93. So stock, what you realize is I actually put this to also tell you what is the upside potential. Okay, this upside potential roughly is about 15, close to 16%. Okay, then another oil company to look at, oil related company, is your China petroleum and chemical. Alright, so you can see this one here is a very nice correction, but expecting it to drop down here first. Okay, this kind of retracement can follow through when there's a retracement in oil also. Okay, so these are all lower risk opportunity. That means very clear setup. Okay, this one actually I never heard of it before, but it's one of the larger cap in terms of the energy sector in the US market. You can see it's a very impulsive break of this entire trend line. So wait for a retracement, a correction, and then the upside is huge. Okay, this one itself close to 27%. Okay, I'm taking only from the breakout of this level, this high, measuring up is already 27%. So if you can catch the retracement at the end of it, it's even bigger. Okay, so this is the oil play. Okay, next, so that is 2018. Now we are moving into the macro trend of passive investing don't work and global deleveraging. Yeah, so this is TNX. It's actually your 10 years treasury yield. This chart was shared by the viewer. Okay, so what you see in this chart is basically the price movement here is your US 10-year treasury yield. Okay, so every time it top at the trend channel line, you have a financial crisis. This is 1994 Mexico financial crisis. This one 1997 Asia financial crisis. 2000.com. This one here 2008 subprime. This one here 2010 Europe debt crisis. Russian financial crisis. We are now here. Okay, you look at the chart here, 2018 to 2020. So somewhere between here, 2019 might happen. Okay, so what's next? We don't know lah. Okay, but based on this, it might be bigger than your subprime mortgage. Okay, so this is one potential indicator that we can follow through. Okay, so when that happens, the details are all in the report. So when that happens, dollar will be the safe haven play for currency. Okay, so potentially that can bring the dollar index all the way to 121. Okay, of course the first target here is 110 lah. Okay, it's not a huge one, but you can see this is a 20% move if that happened. Okay, remember that this portion here is not short term. Okay, it's big picture. But if it's very useful if you can identify, because we never know when in 2018 it will start to show sign. So when it starts to show sign, all this becomes something that you can take out and then straight away look through where we can start to put our money and leverage on it. Okay, so for dollar long, if you don't trade the index, of course, then you look at currency pair. The better opportunity is your pound dollar. Okay, this fall here is something that can expect. Okay, this year, or I would say 2018, you might see this drop. Then maybe when that happens, you see another correction and then another drop. Okay, so this one can actually apply in 2018 already. Okay, this is your dollar time frame, daily time frame. So it's applicable to next year also. Okay, so when this happens, when dollar really strengthen, the drop we are expecting can go up to 1.189. Okay, so now we are at 1.34. Okay, so that is a very huge move. Okay, another one to look at is dollar franc. Again, this is a nice impulse. If we continue to do this as a correction, okay, we might potentially catch this up. Okay, so this one again can be applied to 2018 outlook. Okay, but the reason why we look and focus on the dollar franc is based on dollar strength. Okay, so the thesis must stand up. If dollar starts to weaken, then this one might not be something you want to look at. Okay, dollar yen. So why when there's a risk happen, when risk off, why we still look at dollar yen is because yen itself has its own problem that he needs to solve. Okay, so this one we talk more about it another time. So basically this two, I'm focusing on longing the dollar, shorting the yen. Alright, so that's why this play out. Hey, this is not a lot. Basically you look at it, it's about 700 pips only. 111 to about 118 about 700 pips. Yeah, not a most fantastic opportunity to look at. Okay, if you are looking at stocks, okay, so again this one here, what I did is I take S&P SPX, put it against XLY. XLY is your consumer staples sector. Okay, so putting this basically, if your chart drops, if price drops, means that either your XLP strengthens significantly more than SPX, or SPX drop more than your XLP. Okay, so again, this you cannot trade one, but this is more for bigger macro analysis. So this one here we see impulse correction. This is like what dollar cap we see last year before that drop. Okay, so this one here, it has started to show very small sign of impulse down. So this one macro trend, you can look potentially this drop here. Either your S&P is going to drop very fast, or your consumer staple will actually show some strength. Okay, so what are some of the companies? The full list is actually in the report, but only this one here has this potential setup, which means based on technical has a potential setup. Yeah, I have no idea. I never heard of this company before, but basically that's why I say no fundamental analysis. You need to do that part for your own work. This is based on tech. only. Okay, and how I select filter to do a tag is I base on the largest capitalization in that sector. Okay, so why the rationale behind why largest capitalization is they are large company. Okay, so when crisis hit, likelihood is they will survive more than your smaller companies. Okay, so this one is also a clear impulse correction, then the next likelihood up. Okay, that is all for the whole big picture. More details, read the report.